Have you back. Now, the trade dynamics between the United States and several countries have reached a pivotal point, marked by President Trump's recent tariff announcements. The U.S. has set an August 1st deadline for potential tariff hikes, creating uncertainty in the global markets landscape. This ambiguity involves various countries in the trade agreements amidst unclear communications from the U.S. administration. President Trump's potential tariff adjustments have already impacted the global markets, leading to a decline in Wall Street futures and Asian indices. The president's comments have indirectly influenced Asian financial activities with widespread effects on various economies. Meanwhile, OPEC's decision to increase oil production has further stirred market responses, highlighting the complexity and interconnection of global trade affairs. As European markets digest the latest developments, economic indicators such as the EU retail sales and investors' confidence will be crucial to watch. Additionally, noteworthy participation by central bank figures in international meetings emphasizes the intricate ties between regulatory decisions and market outcomes. My guest is Mr. Gbenga Ogurinola. He is an investment banker and financial advisor. He joins me live from the United Kingdom. Good afternoon, Mr. Ogurinola. It's good to see you today.
Good afternoon, Tolu. It's nice to be here today.
I'm sure you can take it off from where my intro is coming from. There is so much of uncertainty in the entire market, considering President Trump's back and forth with this tariff saga. How does it come to you as we wait for August 1st?
Yeah, so it's look like President Trump is beginning to weaponize the issue of tariff, as a tool, either as a bargaining tool or a way of probably getting some of his policies executed. And that, in a way, has caused so much of uncertainty. And policymakers are not really sure of the direction of the market this year. Even though we have that in place, it appears that the capital market generally has benefited from that uncertainty. It all started with a very major dip and decline in the U.S. market, particularly the major indexes, the Dow Jones, NASDAQ, S&P. But as we speak now, it's beginning to firm up again. And so what we see a situation is where there is rhetorics of tariff, the market comes down. The moment the coast is clear, it springs up again, so it's, but generally, when we look at the capital market, it appears that the capital market has benefited. But looking at trade generally, it's brought about some level of uncertainty. I think the toll is beginning to also gradually be seen in major economies where we are seeing inflation spiking up slightly. We are also seeing a situation where major markets currently are also beginning to be wary of the tariff news. The kind of reaction that we had initially is not what we are having again. But generally, I think it's a period of uncertainty coupled with what is also going on in Russia, Ukraine, and the power of tariffs that that Trump is wading against is both his allies and also those that have been his foes. Everybody is exposed to this tariff. Nobody is spared from his tariff war. And in his first tenure, that was one of the major downsides in world economy. And now that he's back in power again, that has come up again. But I want to believe that the impacts maybe would not be as adverse as we had it initially. But we also pray that some of these things don't get out of hands. Currently is threatening Russia with 100% tariffs. And not only Russia, there's this secondary tariff that is also talking about that any country that is trading with Russia now would be imposed a 500% tariffs, secondary tariffs. And you have countries like China, India, and the European bloc, all trading with Russia for one thing or the other. So it's a bit complicated, sort of, but that's where we are today.
Take a step further. I want to know what this. I was reading an analysis, and some say it could make things difficult for some large United States company. You know, for example, the likes of Apple shares. There was a hit at a particular time, I think earlier in the month, and also the likes of Amazon, Walmart, and all of that, Nike, and all of this. They produced at the time in Vietnam. I'm just asking, what do you think this? What does it mean for companies like this I mentioned?
Yeah, so these companies, what they would do is actually to spread the tariffs implication globally. So I mean, they cannot afford to just put the whole burden on the US market. That would not go well for them. So what they will be doing is to spread the implication globally. So more like the world subsidizing the impact of the tariffs, you know, on the US market in itself. But I believe that they would come out of it. For many of them, they are beginning to, I mean, they have a large pause, and they also have strategies in place. I mean, when it comes to this kind of situation where they are able to spread the cost and also look at areas where they can reduce costs, look at areas where they can source raw materials even cheap. And at the end of the day, you know, they would still come up with good figures, at least moderate figures, maybe not the fantastic figures they used to have, but moderate figures. And over time, I believe that they will be able to work around it. But what we'll be seeing is a situation where the impact will be spread around globally. So we might see a kind of dip in the global GDP this year because of the impact of all these trade tariffs and trade war.
It's interesting stuff. Earlier in the week, Bitcoin also performed pretty well. That market did so well. I saw a bit of gain coming up around that space. What do you think? What does that also mean for equities market and, of course, the fixed income space?
Yes, so the global market is becoming deeper. So when I mean deeper, we are looking at the digital currencies also being a major attraction now especially among institutional investors. Before now, a lot of institutional investors were wary of digital assets or currencies, as we call them, and many of them were not really going into them. But lately, we've seen a lot of institutional investors, fund managers, major financial market players coming into the fund market and really putting in a lot of resources, investments into digital currency. Now that has spiked interest, and it's now becoming more like a scarce commodity. And of course, you know, one of the things that causes rise in product is where there is so much demand. We have so much demand for digital currency, especially Bitcoin now, where it's about $123 per Bitcoin. Last, I think that was I think 2 days ago. So yes, $123 per Bitcoin. So we are seeing a lot of interest. Now, aside from that too, we also see that the United States are beginning to look at having legislations that would promote digital currency. So with that also being in focus, a lot of investors are beginning to look at it that probably the world and the major, of course, leader in the financial market space, that's the United States, has come to accept digital currency as one of the major currencies that will be operational in the world. And that has kind of given a boost to others to believe that probably digital currency has come to stay. And there was also this talk of Bitcoin even being being priced in its millions now and not in its hundreds of thousands, as you said. So the interest is real. Legislation is ongoing. Countries are beginning to also embrace and also have their own form of digital currencies. So all that working in place has made the market and the demand for digital currency to spike in the last couple of days. And I mean, this year and up till late last year, we've seen that surge in the digital currency space.
Brilliant stuff. Now let's wrap up with UK's economy in general. I think there were a lot of discussions too at the time between for the UK and Washington and all of that. Where are we with that? How is it impacting the larger economy?
Yeah, it's well, when we look at the spike in inflation compared with so many major markets, we see that UK market has had a major spike compared with others, though not so huge. But if you compare it with the likes of Germany, France, we've had a larger spike this year than those countries. And because of that, the issue of cutting interest rates is not something that maybe we might see very soon. But when you look at the tariffs war generally, you discover that every other country apart from China and Canada, they've been shying away from retaliatory measures against the US. It's only China and Canada that has actually retaliated in all these war tariffs. And that has emboldened President Trump to use that more. And it will interest you to even know that just in the last few hours, when Financial Times came up with a report, they stated that the U.S. market actually made about 64 billion in custom revenue in second quarter, compared with what they made last year. I think last year it was about 17 billion. So they've made almost a 50 billion increase, you know, compared with what they made last quarter. I mean, this same period last year in terms of extra revenue. So we might still see Trump using these tariffs threats, since it's paying off for him, paying off for the U.S. economy. But I think other countries too need to stand up, look inward, and see what they can do to also ensure that their economy is not affected by all these tariffs. The British economy is in a way being affected, and I think we need to look at what we can do inward. But I believe that a more cohesive, a more coordinated attempts by other major financial bloc players in the world, other major economy in the world, coming together to really fight against these tariffs would help the general global markets. But if they just leave President Trump to be, just bringing the tariff stick all the time, and everybody goes into their shell, we might just see a U.S. dominance, and while other economies are forced to give out, because I mean this thing is like a zero-sum game. When some people are gaining, some are losing. So if the U.S. market is gaining for this, then other markets are surely losing. So everybody must come on board to ensure that there's a even playing ground for everybody in the global market.
That's the only way out of this at the moment. Our market to Nigerian market stayed in green for some time now. Even today is closing by 1.80% in positive. When you look at it, it seems like the market has been staying so very well in green, bouncing back from red, and it's been consecutive, I would say, for some time. I don't know what you're learning with regards to our market.
Yeah, the market Nigerian market has actually benefited from all this uncertainty. I think one of the things that we've been able to do is to ensure that we attract foreign investors. Now that other markets are very fragile and people are looking for alternative, the Nigerian market, I mean, we are not so much in any way politicized. We've been able to attract them, and I think that's one of the things that is going well for our markets. I think this is an opportunity for the market to actually broaden and deepen itself, so that we'll have a lot of financial assets that we are able to attract investors, to invest in, not just the regulars that we have. I know that the policymakers and brokers and capital market operators have been looking at so many products, in the past, and looking at how to test run them. But I think this is a very good time to bring those products into the market, because when you have so much saturation of, when you have few products and the prices have gone up so much, what you would see is at the end of the day, there will be a bust. But if there's a large chunk of assets that investors could could invest in, then it gives a broad and stable market. But if we have just very few assets, then the tendency and the risk of a bust happening is always there. So I just want to say that our policymakers, this is a time for them to come up with a lot of assets that investors, both local and international, could come in, invest in, and help to broaden and deepen our market. Our market still remains a little bit still shallow in terms of value, in terms of financial products. But if we are able to bring in more products into the market, more companies coming into the markets, improvise so many things that we are able to bring into the markets, I think it will do the markets and the general economy good.
We expect some big listings. If that also happens, you see any impact, maybe likes of Dangote Refinery and all of that coming on board?
Yeah, that's part of it. I mean, it's part of it. We have some government institutions too, or at least maybe that could come into the market. I mean, talking about the NNPC that the guest was talking about. I mean, these are things that would deepen the market, bring in fresh funds. They can raise fresh funds and really deepen the market. We can also attract other industries. Now that there's so much about tariffs here and there, I mean, we can attract big time manufacturers in the Nigerian markets, that will come and invest and create jobs, create opportunities in the market, develop their economy, develop the community where they are operating. That is the kind of ripple effect that we want. That is the kind of effects that we want to see in the market. New companies, new establishments, that we don't have, currently in the Nigerian sector come to the market, and establish in the country use foreign investments, to build that brand.
I must thank you so much. Interesting conversation. I know we can go on there, but Mr. Gbenga, that's our time. Investment banker and financial advisor. Thank you so much for spending your time. I know you're busy schedule over there, but do enjoy the rest of your day and have a profitable one.
Thank you, Tolu. Have a good day.
All right, then. Well, that's our package for you today. Thank